Hello everyone and welcome to the second episode of the Daily Grade Data Pump. In these episodes I give an analysis of the different Ethereum on-chain metrics as well as the DeFi on-chain metrics. The last time I did one of these episodes was December 15th, so we're going to be going over the data from December 15th to February 7th. So let's jump right into it everyone. So obviously a lot has happened since December 15th, both on-chain and off-chain. I did want to give a quick recap on the price since I guess it's not exactly on-chain, but it has a lot to do with the on-chain metrics. And I'm going to show you what I mean by that. But basically, if we go back to December 15th, which is what, about here, you can see it if I scroll across here. So December 15th, we were at about $600, around that. And then since then, we've obviously gone up to over $1,600, right? So it's been a pretty crazy ride in just a couple of months, not even a couple of months. So yeah, it's been really wild to see that. And of course, if I zoom out here onto the 1 week chart, we can kind of see just like how insane this kind of growth has been, right? Like, this is the chart from Kraken. So it shows, Kraken's chart shows basically the entire price history of Ethereum, basically from when it first went live, because they were the first exchange to list Ethereum, I'm pretty sure. And you can just see, like, this is crazy. I mean, you know, this whole kind of like bear market that we just went through kind of just looks like nothing now that we're up here, right? So really, really cool to see that. Now, that's obviously played a lot into the different on-chain metrics we've been seeing, right? Price movements and price volatility on the Ethereum network lead to a lot more usage because there's decentralized exchanges, right? There's different DeFi apps, like we have like even more complex DeFi apps coming online now. So yeah, I'm going to be going through all that. Of course, I'm going to be going through stuff got to do with the gas fees as well and kind of like the growth around that and the metrics around that too. So yeah, that's enough on the price. Let's jump right into the metrics. So the first metric I've got here is one that I went through last time. So this is basically a correlation between the BTC and ETH price. So you can see here that during bear markets, the correlation is quite high. And that's because like everything tends to fall together, right? Bitcoin falls less than ETH falls less than other coins, but they all tend to fall together. Now you can see that, you know, during September, October, November, December, the correlation broke down pretty heavily. Now, I guess, you know, towards the end of December, Ethereum was bleeding against Bitcoin pretty brutally, right? It wasn't doing very well. You know, the ratio I think went to 0.022 or something like that, something crazy, right? It wasn't doing very well at all. And then Ethereum kind of sprang to life in January and the correlation kind of started going back up a little bit. So not too much of an update there. I think I definitely went through this metric on the last data pump. But yeah, this is something that I like to keep an eye on because it's just really interesting to see how the correlations kind of change over time. So this is a really cool metric I like to keep an eye on as well. It's from Into the Block, and what this shows is how many Ethereum addresses on chain are in or out of the money with ETH. So basically, if they're in profit on their ETH buy or not. Now, 99% of all addresses are currently in profit because we kind of hit, I think, you know, over 1700, then we've come back down a bit. You know, current price is 1630. So there were some buyers up above this current price. But, you know, the other day it was actually 100% of all on-chain addresses were in profit, which was pretty cool. But even it's still really cool that 99% of addresses are in profit, right? Like, just imagine you bought ETH in January 2018 at $1,400, right? You only had to wait like I mean, it is kind of a long time. It gets us like 3 years, but I mean, we're spoiled in crypto. I think, you know, 3 years is not that long in the traditional finance space, but in crypto it feels like, you know, an eternity. But, you know, after 3 years, you were basically back in the money, right? Back over $1,400. And I'm sure, you know, anyone who bought at that price probably sold, so it's kind of an irrelevant thing there. But still kind of fun to see that all the people that bought in all these price ranges, right, are pretty much like sitting in profit right now. Now, of course, you know, we don't know where the price is going to go from here, so could go back to $1,000, could go to $2,000, who knows, right? I mean, you know, it just depends on what the market wants to do. And then obviously if it went to under $1,000, you know, or about $1,000, some people will be in loss, some people will still be in profit, and then that percentage will go down. So I really like this metric, and they have a bunch of different ways of showing it here. So they have like this stacked chart here, and you can kind of see like, you know, all this red is just like pain, right? All these addresses that hold ETH that is underwater. And then, you know, as time goes on, we kind of get this, you know, it goes from pain to joy and happiness, right? You know, I bet a lot of these people actually forgot that they had ETH, right? Because when you buy it at such a high price and then like the price goes down and maybe you didn't put too much money into it, you're just like, oh, whatever. It's, you know, it's lost money. Who cares, right? So yeah, but this also illustrates why bear markets are so brutal and why it takes so long for the price to kind of like continue going up, right? You need to kind of flush out, I guess, like everyone that wants to sell essentially. So, and the market has to regain confidence. So we obviously had like a really major blow off top in the markets in kind of late 2017, early 2018, where it crashed really hard, bounced up again as it usually does, and then kind of bled out from there. And then you kind of have to have this long accumulation period where things are like bleeding and you're waiting for people to kind of like, you know, finally just get flushed out, and then slowly you can start moving back up again. And it works both ways. Like it's this concept of like reflexivity, right? Where the price is reflexive in both ways, and, you know, betting against, you know, the momentum is very hard. So, you know, and there's people that kind of bought during this bear market too at specific price points that were underwater for a period of time. You know, for example, I bought ETH, I think it was like towards the end of 2018. It was October, and I think the price was around $220. And I bought a bunch of ETH there. I'm like, you know what? This feels like the bottom. You know, let's just buy some ETH here. Now, obviously, that wasn't the bottom, right? The bottom was $80, and that only happened. You know, that only ended up happening like in December. But it's very hard to pick bottom. So I obviously I didn't regret that purchase. You know, I bought at 220 because I figured it would go back up to all-time high and beyond one day. So there's a lot of people like me. I have a lot of friends who do the same thing, right? I don't know. I know one person that actually bought the exact bottom. One. Out of all my Ethereum friends, only one person that I know bought the bottom. And, you know, that was obviously an amazing trade. But, yeah, that besides that, most people I know bought on the way down. So you also have to account for that, right? Where the people buying on the way down, you know, depending on where they bought, maybe they bought at $700 on the way down. You know, as time goes on, they may capitulate and be like, oh, well, I'm just going to write off this buy, right? Because in the depths of a bear market, you just don't know. You know, you don't know when the bull market's coming back. It's a completely different thing. You have faith, but, you know, if you need the money, you're just going to sell. So I guess that's kind of like why these cycles take a long time. And this is a great way of visualizing it. So yeah, enough about that. Let's move on to DeFi growth now. So DeFi growth has absolutely exploded. It's actually gone more than double since my last data pump video here, I think. So December 15th, we had $13.8 billion locked in DeFi. We're now up to $34 billion at time of recording for this video. So obviously more than half here, more than double the growth here. The ETH growth as well has been very interesting. So December 15th, we had, what was it? 7 million ETH in there. Now we have 7.5 million, right? I've explained before how we had even more than that back in November, where it was 9 million ETH in DeFi. And we dropped because the Uniswap liquidity mining finished and ETH2 launched. So a lot of that ETH went into ETH2, which I'm going to go through in this video. I've got a bunch of ETH2 metrics I want to look at. But yeah, so it's remained kind of steady. It kind of fell a little bit here, but then it's been trending back up, which is cool to see here. And of course, BTC locked in DeFi has also been a pretty huge thing. And DeFi Pulse actually has an entirely different section here now called BTC at Work, where they basically show what the trend has been like here. And it's been pretty crazy, right? You can see basically, you know, 2020, I mean, during, I guess, DeFi summer is when we saw all the growth here. So yeah, pretty crazy growth here. And it's continued growing. There's 166,000 Bitcoin on Ethereum right now, which I think is worth, what, $6.5 billion, which is a crazy amount. And a lot of that has gone into projects like Badger DAO. I'm not sure if oh yeah, they do. They track Badger DAO here on DeFi Pulse here. So Badger DAO is actually 8th in TVL, and a lot of that TVL is Bitcoin. Badger DAO is, for those who don't know, it's basically a DeFi app that has a lot of I guess like it's targeted towards Bitcoin, right? It has a lot of Bitcoin kind of opportunities to earn yield on your Bitcoin and things like that. So yeah, that's been the growth there. But we have a few new entrants as well up here. You know, Alpha Homora is definitely a kind of like standout here. So you can actually see, last time I did this video, I don't even think I talked about it. It was only 100 million locked in it. Now it's up to 1 billion. So we've had a 10 times growth in less than 2 months on Alpha here. We can go back and we can see a bunch of them in here. I mean, you know, everyone's favorites are still up here. You know, Maker's still number 1. I think Maker dropped to number 2, or Aave and Compound got number 1 at one point, but Maker seems to be firmly in the lead now with $5.8 billion locked. You know, ETH 2.9 million ETH, so that's by far the most amount of ETH locked in DeFi. You know, Compound is a distant second at 1.3 million ETH locked, and then Uniswap's close there at 1 million. So yeah, Maker's still number one there. And there's a bunch here, others here like Cream Finance, Harvest Finance, you know, I mean, Yearn's been there. Everyone's favorites are kind of in here now. But one trend that obviously is playing out here is that we're seeing a lot of projects just get more overall TVL, right? So if you go just Maker as like the example here, if we go here, right, and you go to December 15th, the last time I did this, the last video, it was $2.6 billion locked. Now it's, you know, 5.8 billion just 2 months later. So we've kind of like doubled the growth across the board of all these different apps. And, you know, the ceiling, I guess, or at least like the kind of maximum amount of value locked is kind of getting higher and higher, and we're seeing other projects kind of enter this as well. So yeah, there's so many projects here now. I mean, it's pretty crazy to see how many there are. 64 kind of projects here right now. So yeah, really great to see the DeFi growth. And yeah, I think Bitcoin on Ethereum is also a standout thing here. The fact that it's still going up, you know, like this so fast, I mean, it's pretty crazy. I mean, it did dip for a little bit, but it's definitely going back up. And I think that's due to Badger DAO, if I'm being honest, because I think Badger DAO launched around here. So yeah, just I guess like shows like what the power of incentives will do, right? People are going to come over, they're going to do different things within Badger. You know, and the top kind of tokenized BTC is Wrapped Bitcoin. Second is actually Hobby BTC, which is surprising there. And then you have Ren BTC as a third here. So yeah, really great to see the growth in DeFi here. All right, on to DEX metrics. So this dashboard I've gone through plenty of times on the Refuel, but I love this dashboard from Dune Analytics that tracks decentralized exchange metrics. I basically visit this like almost every day, pretty much. It's such a great dashboard. Now, obviously, you know, decentralized exchanges have grown a lot lately. You know, I think in particular, not just like Uniswap, but other DEXs are now kind of gaining market share here. And you can see the volume's absolutely insane, right? $1.7 billion in the last 24 hours, $14 billion over the last 7 days, and $55 billion over the last 30 days. And if we scroll down a bit here, and we can actually scroll down to the charts that show the monthly trends, the monthly trend here was crazy, right? Like this was January. We did $63 billion of volume in January, which smashed the last all-time high record in September of $29 billion. And obviously in September of 2020, it was the middle of DeFi summer, right? So we just smashed that. We've gone more than double kind of there. And I'm noticing kind of a theme here, right? That we've more than doubled across all these metrics in a couple of months, which is really cool. We're 7 days into February right now. We've already done $15 billion. You know, if we keep going at this pace, we should kind of overtake what we did in 2020, which is quite insane, right? So, I mean, I think the January 2021 volume is actually half that of the whole 2020 volume. So if we do the same amount in February, we will have done more volume in 2 months in 2021 than the whole of 2020. So that's quite insane to see. And over the last 12 months alone, we've done almost $200 billion, and there's been 1.2 million total unique trading addresses. I've gone through how trading addresses aren't, you know, one-to-one to people before, right? Where people can have multiple addresses. So I would say maybe there's like 300,000 or 400,000 kind of unique people here, and even that might be being generous, but it's always hard to kind of measure that. And as I said, you know, there's been kind of different DEXs gaining different market share here. So you can see the kind of the volume by kind of market here or by app. So Uniswap, of course, is number one. It's on the left side here I'm just looking at. So SushiSwap is number two, which has actually caught up a lot. So SushiSwap was, I think the last time I did the video was kind of like $200 million locked and like kind of thought of to be dead and all that sort of stuff. But since then, it's come a long way, obviously. And they're doing a lot of volume. Uniswap's still doing 51% of the volume, but SushiSwap is now doing 24%. 0x has actually been a standout over the past couple months as well. They're now doing over 1 billion volume. They weren't even really on this chart before. They were pretty low here. Curve continues to do good volumes, right? $1 billion here. And then you have like kind of this balance at almost 500 million over the last 7 days. DYDX at 241 million. And DYDX has grown a lot recently too. And then a bunch of the other ones here. So yeah, it's funny because you can actually go here and see the historical thing where Uniswap kind of dominated, right? You can see pink on the left chart here. Pink is Uniswap and purple is SushiSwap. And you can actually see SushiSwap kind of like, I guess towards the end of last year, you know, it had volume, but it was kind of like stagnant. It wasn't growing. And now in January of 2021, you can see that SushiSwap grew a lot, right? Curve grew some more here. Curve is in brown, and then 0x is in kind of gray down the bottom. So we had like this kind of, I guess, diversification happen within these different decentralized exchanges, which has been really, really cool to see. And one thing you'll notice here that 1inch isn't here. Obviously, 1inch kind of sits on top of all of these kind of protocols. So, you know, I think there's a separate dashboard for 1inch. I haven't got that up right now. But you can see that on the right-hand side here, they have a dashboard, or they have a table, sorry, that shows number of traders for the last 7 days. 1inch is leading by a lot, right? Uniswap is leading by a lot, but 1inch is actually second. So I would say that 1inch is one of the top kind of like volume dexes here. But, you know, 1inch is a dex aggregator, so it's not a dex itself, right? They do have their own dex called Muniswap, which is number 11 down here, if you actually see on the left-hand side. But yeah, I think there's a different dashboard that splits out their volume there. So all in all, a very, very big month for decentralized exchanges, as I'm sure you're all aware if you've been paying attention. And yeah, I mean, it's just crazy that we're consistently over $1 billion of 24-hour volume, when less than a year ago, you know, Uniswap in May of 2020 was only doing $10 million of 24-hour volume. Now it's doing over $1 billion. So really, really impressive growth there. So on to the metrics from Glassnode here. So Glassnode's actually one of my favorite websites to go on to track different metrics here. You should definitely check them out. But basically, what this metric is showing is the number of Ethereum addresses with a balance of more than 10,000 ETH. Now you can see that the growth here has actually been quite crazy, right? From, I guess, like the end of December, and as I explained before, the ETH BTC ratio was falling towards the end of December, so people weren't really stockpiling ETH. Then the momentum shifted, right? And the ratio went up and ETH started kind of like exploding. I mean, towards the kind of end of December, ETH basically teleported through the late hundreds and went into like the thousands very, very quickly. So you can see here that it bottomed at December 28th, where there was 1,059 addresses holding more than 10,000 ETH. Now there's 1,086 addresses. So that might not sound like a big jump, but that's like 35 new addresses, or I think I'm doing my math correctly there. Probably more than that, or that are holding more than 10,000 ETH, right? And if you do the math, that's over 350,000 ETH going to kind of these addresses. But that's much more than that, because this isn't just like 10,000 ETH, this is 10,000 ETH and above, right? So it could be someone holding, you know, 20,000 ETH or 30,000. So the growth here has been really cool. And this is just showing kind of December to, I guess it's just showing to January 10th here. I think there's maybe a delay, or maybe I was playing with the chart before. Okay, I reset the chart here. We can zoom out a little bit, actually. So to today, it's actually more. It's 1,101. Okay, so I had the chart messed up there. So I think that's what, since December 28th, you know, it's another kind of 60 or 50, another 50 kind of addresses there. 40 or 50, so that's even more, right? And then if we actually go down to where it bottomed in kind of September and October, right, it's about 80 or 70 new addresses here. I'm failing my math today. So yeah, and this tracks it all the way kind of back to, I guess, where does it track it to? When the Ethereum network launched. And you can actually see how this has evolved over time, right? And throughout January 2017, throughout 2017, it kept increasing, and then it kind of peaked in March of 2018 at 1,127 addresses holding it here. It dropped very, very rapidly throughout, I guess, 2018, dropped by about 80, and then it went up again through 2019. If you guys remember, the price went up through 2019 as well, to about $380. So back up to 1,020 here, 1,120, sorry. And then, we just trended down since then. And now we're seeing this kind of like spike again, right? And whales kind of collecting ETH and buying up the ETH, which is a very positive sign, as you can see, right? They usually kind of follow price, it seems. So you can see here in 2017, it was actually a very positive sign that this was happening. And then 2018, obviously bear market, whales that kind of getting out. What's interesting is whales kind of weren't stacking ETH through kind of 2020 here, right? They kind of like offloaded, maybe because they stacked during 2019, but then we can see that they've started stacking it again here. So really positive kind of growth there. And, Glassnode doesn't just show 10,000 ETH and above here. They actually show 1,000 ETH and above, so you can kind of see what's happening here. That seems to be going down. which is curious. Maybe this is people, going into the 10,000 or more kind of ETH category. Maybe they're offloading and they're going into like the 100 or ETH or more category, right? There's a number of reasons here. But what I like to look at is like the smaller units here. So you can see the addresses with a balance of more than 1 ETH has been going up very steadily, right? Kind of fell off a cliff here a little bit. I wonder why that was. Maybe that's an error with the data. But yeah, generally the trend has been up no matter what the price is doing, right? And then addresses with a balance of more than 10 ETH has been going up steadily as well. Again, we're seeing a little bit of a drop off here. I'm not sure why that is, but basically, yeah, a bit of a drop off here, but generally kind of up here. And then addresses with a balance of 0.1 or more ETH, which is actually not a small amount today. It's like $160, right, at time of recording. And this is generally trending up as well. But I think, it might be trending up too because $160 is like a couple of Uniswap trades these days, right? So, and you need ETH for gas. So definitely that's playing a part into it. And then addresses with a balance of more than 0.01 ETH, which, at current prices is $16, is going up too. But at the same time, there might be a lot of addresses that have kind of 0.01 ETH stuck in it because of the gas fees too. I don't think it costs $16 to send ETH unless the gas is really high. But in general, I can see that playing a part. But again, this is going up to right here. Now, there is another metric where you can actually see the dollar amounts, but this is part of the tier 3 kind of data here on Glassnode, which you have to pay extra money for, which I don't have. So I can only see the data from a year ago. So there's not really any point kind of looking at this data, unfortunately. But yeah, there is that option there if you do pay for that kind of service with that. So this is another kind of metric from Glassnode here that shows the Ethereum balance on exchanges, or the ETH balance on exchanges. So if I reset the kind of time frame here to an all-time kind of stacked thing, you can kind of see, how it's changed over the years. So during 2017, the balance, or 2016 and 2017, the balance of ETH on exchanges kind of dropped dramatically, right? I think it peaked at, what was it? What's the total here? I don't think there's a total I can see here. Oh, on the left here, yeah. It peaked at about 1 million, which was actually a large chunk of the supply in 2016. I think the supply was maybe 80 million ETH back then. And then, you can see it kind of dramatically falling right up until the end, or right up until like February 2018 here. And it fell to about 6 million here, just eyeballing it. And then, it kind of like skyrocketed kind of back up, I guess, like during 2018 and 2019 and even 2020, all the way back up to about, I guess, 18 million ETH. And then when the kind of bull market really kicked off in August of 2020, we've seen like a dramatic amount of ETH come off exchanges. I think we peaked up here, just eyeballing it, maybe 18 million ETH in exchanges. And then we've gone down and it's like, 14 million ETH, I would say. So 4 million ETH has come off exchanges here. And I think, with ETH, it's funny because when ETH gets off exchanges, it doesn't necessarily mean it's going into cold storage, right? Or to someone's kind of wallet. It could also mean that it's going into DeFi. And there's a chart that I kind of posted to Twitter a little while ago. I don't think I have it up here now, but I can get it up. It basically shows that the kind of like ETH in smart contracts versus the ETH in centralized exchanges. Now, if I check here, let me check quickly. I don't think I've got it there, but if I go to compare it here, and I'll actually show you what this looks like. So this is actually neat. With Glassnode, you can compare different metrics. And I know I'm shilling Glassnode a lot here, and I'm not paid to do that or anything like that. I just really enjoy this website. So if I go to exchange balance percent, right? And then I change the second metric to Ethereum, and I put in here smart contract balance, supply in smart contracts, right? And I always like to do the moving averages just to smoothen the data out. So I have a 14-day moving average and a 14-day. So you can see here, right, on this chart, the pink line is the Ethereum balance, the ETH balance on exchanges, and the green line is the ETH balance in smart contracts. Now you might notice this giant kind of spike on the left-hand side here, where kind of like, I think my camera's covering it, but basically the ETH in smart contracts was 4%, and then it spiked all the way to 25%. Or 23.4%. Now, the astute observer and someone who's been around for a while will know exactly what happened here. But for those who don't, if anyone remembers the DAO, right, the first ICO on Ethereum, or the first big ICO on Ethereum, and it got a lot of ETH onto kind of like the smart contract here, It raised a lot of ETH, and then we had the DAO hack kind of happen, right? Unfortunately, and then that ETH kind of came right out of that contract. But we did kind of finish up higher than what we were, and then during 2017, it's funny because you would have expected during 2017, during ICO mania, ETH in smart contracts to kind of go up here. But actually, if I remember correctly, in 2017, a lot of kind of like ICOs were done with just like externally owned accounts, or just normal Ethereum addresses or Ethereum accounts, not smart contract accounts. And so that's why you don't kind of see a spike here. But then, during 2019, it went down even more. I think 2019 was pretty brutal in terms of the bear market, and people were kind of like exiting, where they had their ETH. We had Maker during kind of 2019, and I think people maybe got liquidated and stuff like that because of the bear market. And then, though, you can see in 2020 that we've had this massive kind of like rise of ETH and smart contracts. I think it bottomed out in June at about 11%. Now it's up to kind of 18%. And in the same time, we've seen ETH kind of on exchanges drop off kind of dramatically too. You can kind of see the green and the pink lines diverge here. Now, this is really cool because that means that this ETH, and I can kind of zoom in here, that ETH is going from centralized exchanges to smart contracts. Not all of it, but some of it, right? Which I thought was really interesting. And I've posted this to Twitter a few times, and it kind of speaks to what we're trying to do in Ethereum, right? We're trying to go bankless, right? We're trying to get off these centralized exchanges and get our ETH off there and put them into smart contracts. So I thought that was really cool. And yeah, the kind of balance of ETH in exchanges now is only 13.5% out of a $112 or $113 million supply. So 113 million supply, not dollar supply, sorry. Which means that, I guess 13% of that, napkin math, is maybe 12 million or something, 13, 14 million ETH on exchanges still, which isn't too much, right? And I think we're seeing more and more kind of get out of exchanges as time goes on, as this bull market goes on, as more people kind of like buy ETH and want to take it off exchanges and kind of just keep it in cold storage or put it into DeFi, right? Which I think is very, very positive. All right, next metric here is obviously the total transaction fees paid on the network. So that's been like a sore spot, I guess, for a lot of people lately. The gas fees have been incredibly high. Now, what this chart is showing is gas fees as measured in ETH, right? So denominated in ETH, not denominated in USD, and it's only showing 2020. So if I actually zoom out here to all time, you can see that even though it's just transaction fees denominated in ETH, right? It's still like a lot of ETH, which is quite crazy, and it's been going up pretty crazily, right? But then you can go to denominated in USD. And once we load this, you can see that growth makes 2017, like the end of the 2017 bull market, look like nothing, right? And we actually kind of have done $22 million of fees over the last 24 hours or so, I think, which is crazy. I think, that's more than kind of like Bitcoin's all-time record sort of thing. So, and obviously the gas fees have been going up even higher than that, right? It's pretty crazy because like now the kind of gas fees are up to where the price kind of is, and I think like, I mean, it's just I hate to say it, but I don't expect this to kind of like go down while there's a bull market happening, while there's volatility happening, because I've mentioned this before, and I actually saw Hayden Adams recently tweet about this and confirm it, that a lot of the transaction activity on the Ethereum mainnet is arbitrage bots. Now, what these bots do is they basically arbitrage between different liquidity pools on Ethereum. So for an example here, they'll arbitrage between SushiSwap and Uniswap, right? If there's an ETH-USD pair on Uniswap and there's an ETH-USD pair on SushiSwap, they'll do an arbitrage when there's an arbitrage opportunity open there. And these bots will just outbid each other, right? No one, when you're doing arb, you don't actually care too much because it's basically free money besides the fees, right? So, and I mean, for those of you who don't understand what an arbitrage transaction is, it's basically, you can buy something cheaper somewhere else and sell it for more on another exchange. And this has been happening within the centralized exchange space for a while. And if you ever wondered why all the prices stay together and why they don't actually get too ahead of each other on different exchanges, this is why. There's arbitrage bots that kind of close the loop, so to speak, here. So when price gets really, really volatile, say ETH just spikes up like 5% in an hour or whatever, the bots just go into overdrive, right? They have to close all these arbitrage opportunities. And that obviously pushes up the gas price because all the bots are trying to outbid each other. And it gets quite crazy. So that's one of the reasons why the gas fees spike during volatility. Another reason is because people, if it's going down, if the price is going down, people are trying to cover their leverage positions, right? Where they might have borrowed some funds and the price is going down really rapidly and they're in like, oh no mode, right? Where they're like, oh, I got to close my position before I get liquidated. So there's that. And then there's also liquidator bots, right, that liquidate people and will also kind of like do kind of like a gas wall, will bid up the gas because they don't care because they're about to kind of earn some nice money. So there's a lot of that stuff that goes on. So, you know, as we go through this bull market, the fees are going to definitely, I think, keep going up because of that, definitely. But, you know, hopefully as we progress, you know, there are kind of pauses here. I think right now it would be kind of a pause. I can see here the gas price is what, 100 Gwei right now for, you know, 138 for rapid, 123 for fast. You know, that was over 200 for the last couple of days. So we have some relief, but still not ideal. And, you know, not ideal for end users, but ideal for the network. I mean, this has been insane. This growth is just crazy, right? And this has been sustained for a few days now, or at least, I mean, this spike here has been sustained for about a week. And the high fees in general have sustained since the start of DeFi summer. You know, it's funny, like the historical Gwei price, I think you can actually see it on gasnow.org. You can go back and see that even just like early last year, early 2020, we were blessed with like low double-digit Gwei. And now, you know, you'd be very, you know, kind of lucky to get double-digit Gwei on most days. So, and that's high double-digit Gwei. So, yeah, it's been very interesting to see the kind of gas kind of prices evolve here and how that's been going. And, you know, maybe one day this is a blip, right? I don't know how high these prices can go before it becomes unsustainable. As, you know, it's sustainable as long as kind of people are willing to pay the price, right? And maybe it goes, you know, way higher than this. Maybe towards the end of the bull market, we see like 1,000 Gwei or above, just because there's so much volatility, right? There's so much craziness going on. You know, and you have to, when you're talking about these arbitrage things, it's not just between the ETH USD pair, it's between literally every token pair, right, that has a liquidity pool within different exchanges. So that could be Balancer or Uniswap or SushiSwap or MuniSwap or 0x, right? There's so many different liquidity pools now. So, and then you just have, you kind of like put on normal user usage on that, right? You put on smart contract deployment, which takes up a lot of block space. It gets insane. So I wouldn't be surprised to see sustained 4-digit Gwei towards the end of the bull market as we get into like the crazy stage. But I don't suspect that to sustain itself, right? Because like for very long, because that's insane. I think, you know, at 1,000 Gwei, I think a normal Ethereum transaction would cost maybe $50, which is one of the cheapest things you can do on Ethereum. So if that's happening, then I think smart contract kind of interactions would be in the thousands of dollars. Some of them already are, but I would say that most of them would be in the mid thousands of dollars, which is obviously unsustainable, right? There's only so much money people have to spend on these fees. But still, in general, I think that, you know, hopefully by that point we have EIP 1559 on the network so that some of these fees are burned, but we'll have to wait and see for sure. So speaking of kind of like, I guess like gas usage and kind of Ethereum network usage, this stat's really cool. It basically shows, and I think I have to refresh it here. Yes, I have to refresh it here. Let me get that up. Oops. Let me refresh the page here to get the latest data. Basically, what it shows is the number of smart contract calls, basically the number of people interacting with smart contracts and how this has kind of gone up over time. Now you can see that during kind of 2017, it went up a little bit, kind of plateaued during 2018, right? We had a bit more of use in 2019 and then just an explosion during 2020. And we've kind of plateaued lately, I think. In terms of smart contract calls. But a lot of this has got to do with DeFi, all right? A lot of DeFi growth happening during, specifically, I mean, a little bit in 2019, but specifically in 2020. I mean, you can see here, January kind of 2020 was, what, 321,000 calls kind of a day. And then up to here, now we have like 741,000. So there's a lot of different kind of calls happening here. And this tracks the gas price too, right? If you were to do a comparison between this and kind of the fees, you would see that the fees are going up with these smart contract kind of interactions. And these interactions are both people and bots and anyone kind of using the network, and kind of, I guess, like the same reasons that I kind of explained before about why the gas prices are going up, like with the R bots and stuff. They also do this, right? They interact with smart contracts and they call them and stuff like that. So I thought this was a really interesting stat here. We actually hit an all-time high in 2020 of what, 790,000, and we've come down since then, but I expect we're probably going to go back up there and kind of like maybe go to 1 million over 24 hours. We'll have to see what happens there. All right, on to the ETH2 metrics. So I promised last episode that I would do some ETH2 related metrics here, and I think this is a good starting point. So this basically shows the cumulative ETH sent to the deposit contract over time. Now you can see here that, we had like a very slow kind of start during November, right? The deposit contract was deployed November 3rd, and then you can kind of see the grind up here. Now remember, if you remember correctly, 524,000 ETH was needed to bootstrap the chain, and people were kind of worried that we wouldn't get to that. But you can see here as we progress, we got to like, I guess by November 20, we're at 148,000, and then it just grew exponentially, right? Up to November 24, where we had 700,000. Now, November 24 was the deadline for getting this kind of ETH in. And a lot of people were just waiting because there was no rush to get your ETH in, right? Because there was no benefit for being early, essentially. So we got that, it happened, right? And then since then, we've seen this steady kind of growth, right? It's been quite steady with spikes here and there. And we're almost at 3 million kind of ETH now in there, which I think is really, really cool. And this is before like a lot of the other solutions have gone live, like Rocket Pool and Coinbase with their staking and stuff like that. There are some centralized exchanges in here, but a lot of it is yet to come, I think. So yeah, almost 3 million, which last time I checked, if we go off the price, I think it's about $4 billion worth of ETH or something like that, which is kind of crazy, right? $4 billion worth of ETH locked in this kind of deposit contract that's in ETH2 staking and validating the chain, which I thought was really cool. So the participation rate is something that I like to keep an eye on for ETH2. Now, for those of you who don't know what this means, I'll quickly explain it. Basically, in ETH2, there are validators that people run per 32 ETH stake that they have. So if you have 64 ETH to stake, you will run 2 validators, essentially. Now, what the participation rate measures is what kind of percentage of these validators are actually online, attesting to blocks and proposing blocks. Now, you can see here, right, when the chain kind of launched on December 1st, while it was coming online, we kind of like went from, I think, 86% up and up and up. And then by basically a week in, we had 98, 99% participation, which is absolutely amazing. And there is some variance here. You can see like sometimes there's a bit of a drop off down. But I think the lowest point we've fallen to is about 95%. So we've basically maintained 95% or greater network-wide participation since launch. And that's basically perfect. I mean, you're never going to get 100% for one reason or another, right? But you're going to get like a high 98, 99% as long as the network is running fine. And that's what the kind of researchers and developers wanted to see. And that is absolutely fine. If participation rate drops too low, I think if it drops below 66%, the network can kind of halt. So yeah, we want to see this as high as it can be. And it's really cool to see that, basically, since it launched, it hasn't dipped below 95%, right? It's been quite steady. We have some dips here and there, and I would actually like to investigate why we have these sudden dips for one reason or another. Maybe we have these dips when there are client upgrades released. Prism releases a client upgrade every kind of few weeks, I think, and maybe when everyone is like upgrading at once and they have to restart their nodes or restart their validators, we kind of see these drop here. But I have to check in with that. I don't know. I'm just speculating for now. But it's still a very, very cool kind of stat to see here. And you can see the balance distribution here as well. So on the left-hand side here, you can see the number of validators that have kind of, 32 ETH in them, and then more than 32 ETH because, obviously as people are staking, right, their balance increases because they're getting rewarded for staking. So you can actually see how many validators have been rewarded by kind of like how much. And there's this very lucky validator here that is basically way ahead of the pack and has gotten a lot more in rewards than the other ones, right? And then over here, you can see that some of the validators actually have more than 32 ETH in them. I'm not sure why this is. It might just be someone who's kind of like maybe messed this up, or a few people have messed this up. But yeah, interesting to see that there. But basically, this is what you really should pay attention to. And it's nice to see that most validators are around kind of the same thing here. There's like a nice distribution. But yeah, this single validator that has gotten much more rewards than everyone else is pretty lucky, right? So this is another really cool chart to keep an eye on. This one as well, ETH1 deposit addresses. So this shows kind of like where the ETH came from. So you can see one address here where 13.65% of the ETH currently validating came from. These aren't labeled, but I'm pretty sure this is Kraken. And then there's a bunch of other kind of whales here. I think Binance is in there, Lido Staking is in there, Celsius is in there. I don't know which ones they are here, but I'm pretty sure that they're in there. And then the rest of them are just like probably individual whales or other companies that I don't know of. Like I think there's Bitcoin Suisse as well. And then the majority of it is actually quote unquote others. So this is actually really great for decentralization, where basically the others category owns way more than 51% of the kind of network here, or validates way more than 51% of the network. And, you know, even if all these kind of entities banded together, I think just eyeballing it here, I don't think they have enough to do any kind of attack. Maybe they have enough to do kind of censorship attacks, because I think you only need 33% for that. But they would have to definitely all band together. And then I think if someone finds out that they're doing this, they're going to get slashed as well. So, and you know, I don't imagine Kraken with 13% of the kind of ETH in here, I don't imagine they want to get slashed, right? So definitely not too big of a worry here with that, but good to see this distribution nonetheless. So last thing here from the ETH2 side is a graffiti word cloud. Now, for those who don't know, each validator that you have, you can actually assign a bit of graffiti to it. And every time you propose a block, that graffiti kind of gets puts up on this gets put up into like the ETH2 kind of network. And then the Beacon Chain website here basically shows it in this word cloud. So this is the word cloud of the 25 most occurring graffitis. Now, Welcome to the New Beginning is the biggest here. That's actually part of a staking pool. And as I mentioned before, Bitcoin Suisse is kind of staking here. This is actually a cool way to see all the people that are like the majority stake on the network, because they're the ones going to be proposing the blocks the most of the time. So Cream here, Staker, you have like a bunch of other ones like Lighthouse. This is the default kind of, I mean, you can see the clients here, right? This is the default graffiti on a lot of them. But yeah, really cool to see. I think there's like a pool here as well. I mean, validating from DAppNode. Okay, well, that's a default from DAppNode as well. So yeah, this is really cool to see. And then a pop-up as well here, right? So yeah, this is just really, really cool. I thought that it was a really good way to visualize like what kind of participants are on the network. And yeah, as I said, anyone can put their graffiti here. But if you want it to be shown in the word cloud, you would need it to be the 25 most reoccurring graffitis. And to do that, you need to be one of the biggest stakers. So yeah, to get in here, you'd have to be basically a whale or like a staking pool or something like that. But still, you can actually look at your graffiti on here. You just have to kind of sift through. It won't show up in the word cloud. It'll show up in the other kind of metrics that this website tracks. So yeah, definitely go give that a look if you're interested in that. And as always, all the links from today's video will be in the description, so you can go check out all this stuff for yourself and, you know, play around with the different metrics and things like that, which I think would be a really cool thing to do. All right, on to data from the block. So this is the Grayscale data. So for those who don't know, Grayscale is a company that offers kind of tax advantage products. And they have a BTC product called GBTC. They have an ETH product called ETH-E. And people buy into this because they want kind of like tax-free trading of ETH and BTC in their retirement accounts or whatever. And this is a product that's available to them because there's no ETF for ETH or BTC yet. And you can see here that the ETH holdings in Grayscale's Ethereum Trust has absolutely exploded, right? I mean, kind of like throughout 2020, it went from, what was it? Essentially 500,000 ETH to now almost 3 million. So that's a 7 times increase. And you can see it kind of like flattened out here. And that's because they had to close the fund for a little bit. And they reopened it recently. And if I go to like the 1 month here, I can actually see when they reopened it. And they've, since reopening it just a few days ago, they've added another 400,000 ETH. Oh, sorry, 40,000 ETH. My bad, not 400,000. Which is pretty cool as well. But since I did the last video on December 15th, they seem to have added, what was it? About 500,000. But yeah, as I said, I think they paused. Yeah, I think they actually paused it after I did that video, it looks like. But there was also, and I explained this in another video, the kind of premium coming into fruition, where the way these products work is that the ETH locked in here has a 6 month kind of, the ETH in here has a 6 month lock, where the price of it can get way ahead of the actual ETH price. So I think it got like 10 times ahead of the actual ETH price, and then arbitrages will actually close that loop there. So yeah, that was really, really good, cool to see that more kind of ETH is being sucked up here. There's more institutional demand, more demand from people who want kind of, I guess, exposure to ETH, right? And this is currently worth over $5 billion, right, of ETH in here. And this is actually a chunky amount of the supply. I mean, 3 million ETH. if is like 2.5% of the supply or something like that, or and then that's as much ETH as in ETH2, right? So we have this ETH that's just being locked up in so many different places. I mean, it's quite bullish, and you can see. I mean, these metrics all popped off after DeFi summer, basically for ETH here. So yeah, and as I was talking about, the premium got really ahead of itself and then closed. I mean, the premium was even more of ahead of itself in 2018 here, but recently it kind of got ahead of itself a bit too, and then it kind of collapsed, and the premium's not very high. But as you can see, the premium goes up and down, and I expect it to keep going up, especially during a bull market where there's lots of demand for these products, essentially. So another chart here that I went through before on Glassnode, but this is another way to view it here, because on Glassnode, I said that I couldn't see the dollar amounts of how much ETH addresses with a balance of over X amount in dollars. So you can actually see here that the balance of over 1,000 kind of dollars worth of ETH is skyrocketing, right? There's 1.62 million addresses with over $1,000 of ETH in them, and that's because the price has been going up too. So you can see like it skyrocketed after the price basically doubled, right, in a few days. And then wallets with over 10,000 worth of ETH in them as well, right here, over 1 million. Kind of, I guess you can see it if I do. Yeah, if I click through, you can actually see the growth. Over $1 million has actually skyrocketed as well, right? And then over $10 million has started to kind of, I guess if I do this, it's skyrocketed as well. But yeah, it's because it's collapsed. But yeah, as you keep going down, there's not that many addresses with $10 million of ETH in there. It's 1.72 1,720 kind of addresses with more than 10 million ETH in it. So yeah, but yeah, I particularly like this metric where you can see like, you know, $1,000, more than $1,000 in it is really great, because it means kind of like more and more people are kind of, you know, have ETH or have more value in ETH, and that means we have more economic bandwidth for the Ethereum network. So I think that's really cool. And also the more than $10,000 worth of ETH as well, because that's not actually that much. It's, you know, that's less than 10 ETH these days, right? So I think a lot of people who bought ETH during obviously the bear market have held on to it, and now it's, you know, they're going into kind of like these addresses here. So another really cool metric from the block here. Percentage of the Ethereum supply that is active. This one's really awesome as well. So you can actually see that basically 96% of the supply has been active within the last 5 years, right? But then as you keep going, you can see that less and less are active as you keep going on. So only 87% has been active in the last 3 years. In the last year, 66% has been active. In the last 90 days, 50%. And then in the last 7 days, kind of 28% of the supply has been active. Now, I think it's funny, like if I can't really zoom in too much here, I don't think. If I go to the 3 months, you know, you might be able to see a noticeable kind of, I guess, like spike in the active supply around ETH2, because there are a lot of ETH2 holders that were waiting. You can actually see a noticeable spike here, right? Percentage of supply that was active in the last kind of 90 days, in the last 1 year, and then I guess in the last 3 years, not really, right? So yeah, I guess in the last 1 year, people were holding it and waiting for staking. You can see kind of I guess on the 24th of November, it going up a little bit here, or towards that date, it going up there. So that might be one explanation. But yeah, I think looking at kind of like, I mean, there's a chart on Glassnode that shows this as well. Actually, if I bring that chart up, I can show you. It's HODL waves. It actually does a really good job of kind of showing it as well, where it shows like the percent of the active supply, if it wants to load here. Yeah, so you can, sorry, percent of the supply that hasn't been active. So you can see here that, you know, I guess for the last 5 to 7 years, 4.5% of the supply hasn't been active in the kind of this like, you know, for that long, which means that supply hasn't been active since Ethereum's genesis, because Ethereum's only I think 5 or 6 years old at this point, which is really cool here. And then you can, you know, go down a list here. You can see on the right hand side and see, you know, how much of the ETH has been active when, and things like that. So it's actually really fascinating to see that, you know, a large chunk of the supply hasn't been active for longer than a year, right? You can see 15, 16, it's 31%, 49%, plus 5. Over 50% of the supply hasn't been active for more than a year, right? So it's either sitting in cold storage, or maybe it's sitting in kind of a Maker Vault or something, right? Sitting on another DeFi app, or it's like sitting in ETH2 at this point. So yeah, really cool to see these stats here, and cool to see the block have a dashboard for it as well. So The transactions on the Ethereum network have obviously been going wild lately, right? Because a lot of people are doing a lot of different transactions. And it's funny because we were actually had an all-time high back in, I think this was literally the exact end of the bull market, I think. 10th of January 2018, we had 1.24 million active Ethereum addresses based on the 7-day moving average. Now, we spiked up to more than that, I think. What was this? 1.24 million? This is 1.24 million. So we basically broke the record again on the 13th or 14th of August, which I think was the peak of DeFi summer. Then we came down and we've been slowly creeping back up and we're pretty much like above all-time high now, I think. Yeah, we are. So we're basically at all-time high of kind of like daily active Ethereum addresses. Now, this for me, daily transactions for Ethereum. This for me is one of the most bullish metrics because the more activity on the network, right, the more transactions going through means that people are doing more, especially at high gas prices, means people are doing more economic kind of activity that's worth more to them, which means that I think the market is more bullish, right? You can see during 2018, basically there was a period where like it just plateaued and then like towards the end here, like when I guess like we really hit the bear market, when we went to like $80 towards the end of 2018, we had like a kind of, it fell off a cliff here and then kind of went back up with the price. I mean, I wish there was a way to overlay the price here, but basically the price went up to like $380 here, then came down again. And then all through 2020, we saw the price go up, right? And then the price came down again, and the price has been going up. So it does follow price, right? And I wouldn't say it's like causation where the daily transactions kind of tells you that the price is going to go up. I'd say that like they go up together, but if we keep seeing it kind of like trending up, I think that's a very positive sign for the network in general. So nothing bearish there basically. And this shows the monthly overlay of the transactions on the Ethereum network, not just the 7-day moving average. So this gives you a bit of more of a macro picture of how it kind of works out. And again, like if you were to overlay price here, you would see price spikes up, go down, had a little mini bull market in 2019, go down again, and then up throughout 2020 as well. All right, last metric is the Ethereum hash rate here. So obviously, as the price of ETH goes up and as more fees are paid to miners, the profitability of mining goes up, right? Now, you can see here that during the bear market, I guess, like ETH's hash rate was kind of flat, trending up a little bit, but very flat. Whereas Bitcoin's hash rate was actually going up, right? Because its price was going up more than ETH and things like that. But, since we saw kind of like ETH come back since the mid 2020, we've just spiked up like crazily. I think we're at all-time highs right now. And it's not just because of the ETH price, it's because of the fees paid as well, which actually, if I get out of this, and I think the block has a kind of has a chart for this. Yeah, they have a miner revenue chart. So if I kind of bring this up here, if it wants to work. Oh yeah, there we go. So you can see the miner revenue, the block subsidy in blue, which is aka the block rewards. So every Ethereum block that's produces 2 ETH per block for miners. And then the transaction fees in this kind of like red color here. Now you can see that the transaction fees are actually taking up a large part of the kind of money that miners are making, right? And we saw this kind of start playing out in DeFi summer, and it kind of like became, I guess, like a quarter of the revenue they were making. Now it's, I think this was maybe just eyeballing it here, maybe like 40%. As of this month, and it's only been 7 days so far, I think the transaction fees are more than 50% of the miner revenue so far, right? And this is actually not a good thing. This is actually a security concern because it leads to instability with miners. So this is one big reason why we want EIP 1559 in as well, because the fees paid to miners is actually meant to be a bonus. It's not meant to be the way Ethereum is secured. Ethereum is secured by block rewards, aka the subsidy. In ETH2, it will be secured by block rewards and the subsidy because ETH2 has perpetual issuance, but very low perpetual issuance. And the transaction fees are just gravy on top of that. So we need EIP 1559 implemented to burn most of these transaction fees, or at least a portion of them. And the miners will still get paid fees, but it won't be like the whole fee, right? And that kind of leads to better incentives for the network and kind of like fixes that instability, or at least makes it a lot better. But it's still very interesting to see, why the Ethereum hash rate is going up, right? Why you may have seen miners kind of like fighting against EIP 1559 on Twitter. But at the same time, these miners are making an absolute killing, right? In this month here, they basically, the kind of like subsidy and the transaction fees total to $830 million in January, right, of miner revenue. That's absolute killing, right? And, you know, this ETH as well, if they're stockpiling it, they'll be able to be big stakers within ETH too. So, I mean, they're making as much money as they were as ever right now, especially from the fees, right? You know, the subsidy in January of 2018 was more than it is today. It was 3 ETH per block back then, I'm pretty sure. Whereas it's only 2 ETH per block today. And they're still making a lot, right, from the subsidy and the fees, basically. So, yeah, if you account for all of that, miners are making a lot of money here. I'm not going to go on a rant about miners, of course, but yeah, it's interesting to see why they would be fighting what is essentially a pay cut, right? But at the same time, the pay cut wouldn't be all of the fees. It would maybe be like, I think at best a third of the fees, maybe. I've seen numbers as low as 20% thrown around as well. So like a fifth of the fees would only be burned, and the rest of them would still be paid to miners. So yeah, that kind of explains why you've been seeing that kind of play out within, I guess, the ecosystem and within like the Twitterati or the Twitter sphere as well. That's it for today, everyone. Thank you for watching the latest Daily Grade Data Pump. I hope you got a lot of value out of that. As I said, I will link all these in the YouTube description. You can go check out these charts and metrics for yourself. You can play around with them. You can do comparisons between them. I love on-chain data. I look at a lot of it. I mean, there's so much more I could have gone through, but I didn't want to, you know, make this video go for like 5 hours basically. But there is data for everything these days. And if you dig right, and if you look, if you basically pay attention to the data, you can make some informed kind of decisions around investments. You know, not just the data got to do with Ethereum network, but the data got to do with DeFi as well. So there's a lot of different DeFi metrics you can look at. And, you know, I'll go through that in the next Daily Grade Data Pump. Actually, I'll focus more on kind of the DeFi metrics. But there's, you know, for the specific apps, there's a lot of things you can look at, and it's a way to inform your investment decision. And as an example here, if you had looked at SushiSwap's kind of, you know, metrics back when I think the price was like 60 cents or something like that, you would have been able to spot that their metrics were still, you know, were flat, but growing a little bit, right? You know, everyone thought they were dead, but they weren't. They still had $200 million locked in there. They were still doing decent volume. They had plans, you know, to kind of like introduce new liquidity mining and stuff like that, which they did. And now SushiSwap is rivaling kind of Uniswap with volumes. You know, it's grown a lot, right? And total value locked. So yeah, these kind of insights can be drawn directly from on-chain data, and not a lot of people are looking at it, right? More people are looking at it now than were maybe a year ago, but it's still like a superpower. It's still a very nice way to kind of like get ahead of the pack. So I definitely recommend going and checking out all these sites. They'll be linked in the description. But yeah, thank you everyone for watching this video. I'll be back next month with a fresh one. So subscribe to the YouTube channel so you don't miss that. Join the Daily Gwei kind of Discord channel. All the links are in the description. You can subscribe to the newsletter, all that good stuff. And don't forget to give this video a thumbs up. So yeah, thanks everyone for watching, and have a great day.